All right, guys, and welcome to a new pre-market analysis. Yeah, today it's Friday. It's Friday, the 7th of June. I don't have much time. I'm a bit late as well because I'm going to a master class the upcoming 3 days. But someone asked me to dive into the 4-hour candles, do the daily breakdown in the 4-hour candles, which I will do. But instead of just doing the 4-hour candles, I will just do an entire top down and just cover everything. Um, but since we're doing a top down, I will first get everything into place rather than analyzing and then getting everything into place, because that way I can work much cleaner. So let me get that done real quick. Um, so we've got Asia highs up here. There we go. Asia high. We've got Asia lows down there, formed at 140. There we go. Both seem to be the proper Asia highs and lows. This is a low that led to a new high, and this is a high from where we got a reaction. So that seems to be all good and well. We're building up some liquidity there that I'm targeting. Previous daily high, previous daily lows. Looking good, looking nice. Internal range liquidity taken. Low, high, next on the line. It's probably this low, depending on news, because we have news today. Can I track that? We go. Then plan it back. Nice. Oh, because we have NFP today. We got unemployment for cat, also for dollar. So yeah. All right, all right, all right, all right, all right. All right. Let's break it down, break the candles down, and see what has been going on or what is going on actually. So on the weekly, we know that we have a high. We can see these candles, actually a rejection. So I feel like we got buff some liquidity here and then we turn around. It actually didn't. So that's already cap. But or did we? No, we actually built up equals there. So that's interesting. Price got up there, and instead of taking the liquidity, it reacted from this. Ah, you can already see it. You can see this last wick, how it took that internal range liquidity there. Let me zoom in. So you can see price trickling down, slowing down. That's it. Had to break below this low here. So if you pull this across, this was the bearish break, and it had to get below there. Essentially, it was ready to get below here. So it built up liquidity in 2010, then, or it created a low in 2010 to be correct. So we have a high, a low, a lower high, a lower low, a lower high. Created liquidity, trickled back, and took another 4 or 5 years, or sorry, 3 to 3 years to get down there. Yeah, okay. 2 years, 2.5. So a build up a liquidity here in the form of those equals, this low and this low. And then price had to get below here. And what did it do? If we go into replay mode, it's even more visible on the daily. We had a high, a low, lower high. And then in terms of um structure ranges with the discount premium, it doesn't really fit, but we have a low, we have a high, a low. Then price takes this into the range liquidity there. Let me use this one to reach back into the premium from this high down to this low. Then we create equals here again. Price trickles down, takes out the equals, or creates equals, creates internal range liquidity, moves down, takes into the range liquidity, and then that's where the move comes from. So we got one liquidity being taken out, second push liquidity being taken out. And then this is where the proper break came from. And because it had that nice liquidity grab, this is where price later on the weekly reacted from. So that's this area there, as you can see. Now we have a high, we have a low, a lower high, and this is where I started to read structure from a different point perspective, because this is too far away. This is too far away, too major. So I tried to zoom in a little bit, and I start following price from these levels. So we have a high, we have a low, a lower high, and a lower low. And based on this structure, we want to see lower pricing, but we do know that this was the last high that led to a new low. So if you pull this across from this high down to that low, we never reached back into that premium pricing. So overall, we can see price come down or come up, take out these highs, and then move further down. But that's on the high time frames. That would take ages. It took price from 2011. It took more than 10 years to get here. So 11 years. So that's too far away. We're scalpers, we're intraday traders, so we don't care. Back to the weekly. Then what can we see here? Price push down, indicating that it wants to move lower, then slows down to create internal range liquidity. Again, price takes internal range liquidity, gives an inducement to take out the first sellers. First sellers taken out, and then it moves further down. What can we see here? Again, those rejection candles. Look what it did here. Got up, get down, got up, get down, got up that above that liquidity. And then if we zoom in again, see how we got those rejection candles in the size of candles, and then it took 1, 2, and a third week. We got a strong push, but we already had like sort of an indication candle with body closure to the downside, week to the upside after those rejection weeks, indicating that price is willing to move down. Oh, sorry, move down. I don't know why I'm yawning. This is super interesting. Then here, same thing where we had a high that led to a low. Price got above there, wicked above, then gave us a turnaround, and that's why I'm interested in this overall supply zone. I narrowed it down to this supply zone here on the daily, but essentially price reacted from this weekly supply zone, wicked above this area here, came into the gap sort of we had there, tapped into that, just got above there, but never tipped into the daily supply zone, but it doesn't matter. And then it pushed further down. Now, from here, we can see again, you have this bearish range, weekly or daily, tapped into that supply zone, got above that liquidity there. Got above this one as well. And then we pushed further down, got a bearish break. Not a strong break here. Wick just below, push to the upside, left wicks to the upside, barely closed above. And then here we have a push. Now we have internal range liquidity taken. Got some liquidity building up. But thing we can't ignore is that we only have bullish candles there. So we've got to be mindful of that. That price might be able to push higher before we move lower. We don't want to, because our DXY analysis is pointing the other way, but we don't know. Going on the daily, and what I will do now is break the daily down with 4-hour candles. I hope this makes sense. You can always check it yourself. I don't know why I need to do it, so but why not? So bullish structure. Let me see. Let me see. So here it's more clear. Took that sweep there, records from there, got into this area, pushed down, and this is actually quite detailed. I think this is like a 1 hour supply zone or something. Yeah, 4 hour order block, 1 hour supply zone. And again, what happened before we tapped into that area? First of all, now I have to use this one. First of all, we had liquidity building up. Whoops. Liquidity building up here. Then over here, we start to form equals as well. Rejection, inducing sellers into the market. They be taken out, and then we got the move. Same story here. Bit weird there, but nonetheless, took out that high, and then we got the move. But it was really just bullish structure turning bearish rather than buy, sell, buy, down. So yeah. But then same story here. This was our last range. We took liquidity. Nice build up there. Took some time to turn around and then we pushed further down. Liquidity taken, pushed to the downside, liquidity taken, pushed to the downside, liquidity taken, liquidity taken again. And this is why I'm expecting the move to go down now, because we took liquidity twice and a third time here with that build up. Although it was just following the green structure, it's a nice buildup of liquidity. And that's why I'm expecting price to move further down now. If you look at the daily, it's actually quite a slow, the price action. If you look at the 4 hour, you can see that those pushes further down. Then ranging, why is it ranging? Well, we know that towards the end of the week, actually today, we have NFP news coming out. So we wait for that to play out. We now have a previous day high and we have this low. And after that news, we will either take the highs or we'll take the lows. Or what might happen is that we take out the highs first and then we push further down. But it will depend on how price moves today, what will happen today, and from there we can make an informed decision. Could clearly see those rejection candles here. Those in the side. This is definitely in the size of candle. That 4 hour candle was on the back of news yesterday. As you can see, job claims, but just reacted, resulted in indecision on the higher time frames. Then we have this bullish range still being left. So another possibility is that price now trickles down into these areas. And from there, we can expect a long move. We've got a nice 4 hour order block sitting over here. We have a nice supply zone sitting over here. So both are quite valid to move long from. I will now mark this out as well. Why not make it even more messy? POI 4 hour order block, 1 hour supply zone. Not really. It's not. The supply zone starts here. Tapped already into that. So just 4 hour OB. What else can I tell you about the 4 hour? And this is what it looks like. You can clearly see what happens here. Candles wicks to the upside, followed by a turnaround. And what I like is that we created a lot of wicks here. So there was selling pressure, but buyers took over. Selling pressure, buyers took over. Indecisive, buyers took over. But that resulted in a nice liquidity pool there, which I'm very eager to target. So we will see. If we look at the 4 hour over here, if we zoom in, we can clearly see that liquidity build up there. Oh, it's not really that clean actually, but you know that below every low is liquidity, above every high is liquidity. And This is the bullish break. Look, this is correct. Okay, hold up. This is correctional. One, two, three. Actually doing it wrong. Shit. So we've pullback. We're tracing into discounted pricing. Then we have a push away, but this push away is quite correctional if you ask me. It does have impulsive big candles, but it is correctional. Um, if you look, discount is reached every time, indicating that price is filled here, meaning potentially, not 100% sure, you're never 100% sure, that liquidity sits below here, mostly. And if price is willing to turn around, we take that low. I don't feel like, especially if we get below here, I don't feel like price is willing to move up again. But it also depends on the way price will move away from this area. We need a strong push to move away to indicate that we're going bearish. And as of now, this was nice. This was nice, but still not what we needed. So yeah, this was the 4-hour breakdown of daily price action, really. Um, especially these areas here and this. I don't know what else to show you on the 4-hour. Because it's not necessary to look at the 4-hour over here. That's bullshit. Why would you zoom in on the 4-hour over here? We tapped in, we've been in that area. Like, if we get up here, let's say price now moves up here, then we need to look back at this area. But as price will get there, we will look into it. For now, it's not necessary to look at that. It's just a waste of time. Same for these lows. You already know what happened there, so why we should take a look again? And we're not there yet. Like we know we can already see on the daily. That's the whole point of reading candles. What happened there with the wicks, liquidity building up, taking that low, moving up, inside bar there, incisive, then came up. So that was the liquidity point. That liquidity point been taken out. Then we got to move to the upside. Took that low, internal range liquidity taken, push to the upside, inducing buyers. Another low taken, liquidity taken, push to the upside. So you can already read that from the daily. So why would you try to read that from the 4-hour? You can. Why not? See? As I said, inside bar, liquidity taken to the upside. Done. Another move. Breaking above here. People think we're going long already. We've been taken out here as well. They sweep. Not a nice sweep inside there. As you can see on the 1-hour, there's this sweep candle or sweep line. Push to the upside, never reached back into this. So what we could do is actually take this into detail like that. Actually, it's from this high because it's a 1-hour candle. And pull that across, and that's where we might get another reaction from. But again, that's too far away. So once we approach these areas, that's when you zoom in. That's EU. EU today. We've got NFP. If you look at this price action, it's ugly as days. So I would wait for price to get above previous daily highs before I look for shorts, and I would wait for below here to look for longs. Then GU. I'm not gonna do an entire breakdown on GU as well because it's been already quite a long recording, but still the same as yesterday. I wait for price to get above the previous daily highs or above here, and I wait for price. Oops. to get below here. Damn, below there. And this, like at the same time, you don't need to zoom in. You can clearly see what's building up here. So we wait for price to get below there, and then I'll be looking to long. So I can just pull it like that. There we go. And it doesn't make sense to me to short above here. Why? Well, even internal here, we broke nothing. We broke this low, but nothing major. We are inside a bullish range. We tapped into this kind of pricing. We started forming bullish structure, although it's correctional. Why would you try to long against one, two structures plus liquidity? So it doesn't make sense with low, high, higher, low, higher, high, potential higher, low. So if anything, we could look for longs, but it's just shit. It's not clean. Um, what we could say is that we have this low that led to this high, and just anywhere from discount area, you could look for longs. That will make sense to me. So yeah, that's it for GU and EU, DXY. Yeah, NFP is probably gonna take the lows, and it's gonna be a wick, and then hopefully we ready to move up. And if not, then we will move against the grain and growing. But we still have this bullish structure here, and we have this low that led to that high discount price, so we're moving against that one as well. So that's why these highs are still in play. Plus, we have this one here as well. So a lot of liquidity already taken, but also a lot of liquidity still being there intact to be taken out. So yeah, that's my pre-market analysis for Friday. Let me know what you think, and I'll catch you guys later. Beware of the news today. We've got NFP. Might just sit on your hands. If you made any profits this week, just keep it. All right. Catch you guys later, and peace out.